हाय एवरीवन, सभी को नमस्कार। वेलकम टू टुडेज वीडियो। आज की वीडियो इज़ अ लिटिल स्पेशल फॉर मी बिकॉज इन टुडेज वीडियो आई एम गोइंग टू डिस्क्लोज विच स्ट्रैटेजी डू आई यूज़ फॉर ट्रेडिंग, what is the psychology behind the trading strategy that I use, how do I manage my capital and how do I mitigate my risk। आज की वीडियो को स्टार्ट करने से पहले समझने की कोशिश करते हैं कि मार्केट में किन तरीके के ट्रेडर्स होते हैं, जिससे हमें एक आइडिया मिले कि हम जिस स्ट्रैटेजी को यूज़ करने वाले हैं उसका रिस्क प्रपोर्शन क्या है। पहला होता है इंट्राडे स्ट्रैटेजी। जैसा कि नाम से जाहिर है, इंट्राडे स्ट्रैटेजी इज अ ट्रेडिंग टेक्निक इन विच अ ट्रेडर्स एंटर्स इनटू द मार्केट एंड एग्जिट्स द मार्केट ऑन द सेम डे। हमारी स्टॉक मार्केट सुबह 9:15 पे ओपन होती है एंड दिन में 3:30 क्लोज होती है। सो अप्रॉक्सीमेटली देयर इज एन इंट्राडे ट्रेडिंग टाइम ऑफ 6 hours. If a trader opens and closes his position in these 6 hours, it is known as an intraday strategy. To be an intraday trader, it is required to be a high skilled trader and with a lot of experience. Talking about swing trading strategy, as we have priorly discussed in our videos, we have a clear entry point and an exit point. We try to catch a swing low or a swing high, and on the basis of that we try to make profits in the market. Moving on to the next, a positional trading strategy. In this type of strategy, a trader tries to catch a certain upward or a downward momentum in a stock based on certain events. अब ये इवेंट्स क्या होते हैं मार्केट के अंदर? मार्केट के अंदर कोई किसी भी शेयर की अगर हम बात करते हैं तो या तो उसकी क्वार्टरली रिजल्ट्स अनाउंसमेंट या एनुअल रिजल्ट अनाउंसमेंट, या फिर एक सेक्टर के लिए कोई अच्छी है बुरी खबर, या फिर कोई एक ओवरऑल सेक्टर के लिए कोई नई पॉलिसी इंट्रोड्यूस होना। These might create certain repercussions in the market which could lead to price up and price lows in a particular stock. तो अगर आप इस price momentum को catch कर लेते हैं based on that certain event, you can create certain positions in the market. Usually a positional trader has a time frame of somewhere around 1 to 2 months in the market. And the last strategy is the scalping strategy. Scalping strategy is a technique in which trader tries to take advantage of his high capital and generate massive returns on a small profit percentage. इसको थोड़े और डिटेल में समझने के लिए let's try to understand the basic maths behind the scalp trade. Look at the screen above to understand with an example. पहले समझने की कोशिश करते हैं प्रॉफिट अर्न क्या होता है। प्रॉफिट परसेंटेज इज नथिंग बट द ROI that we have generated while trading. And position size is nothing but the capital that we have deployed. It can be 10,000 rupees, 1 lakh, 10 lakh, whatever. So moving on, let us try to understand with the help of an example. पहले समझते हैं एक नॉर्मल ट्रेडर के पर्सपेक्टिव से। फॉर अ नॉर्मल ट्रेडर, let us assume that a normal trader uses a capital of 50,000 rupees to take a swing trade or a positional trade in the market and is able to generate an ROI of approximately 5%. So what will be his profit in the market? His profits will be 5% of 50,000 rupees, which will come, I think, somewhere around 2,500 rupees. And let us try to understand with help of a scalp trader. Now, as you've already discussed, a scalp trader is a one who takes advantage of high capital to generate handsome returns on a small profit percentage. So in this case, the capital of a scalp trader is very high as compared to a normal trader. In this example, we are considering the capital to be somewhere around 50 lakh rupees. The ROI that a scalp trader generated is somewhere around 0.5%. Yet you will see that the profit that he is able to generate is somewhere around 25,000 rupees. So in this example, we can clearly see that with help of a large capital, a scalp trader is able to generate a very high profit on a small profit percentage. Can we say that the capital or the amount of capital that a scalp trader uses is directly proportional to the profit that he generates in the market, provided that he is able to catch the upward momentum? Similarly, we can say that it is directly proportional to the risk as well. So let us understand with an example. If a normal trader books a loss of 2%, that he will only make a loss of rupees 2% of 50,000 rupees, that is somewhere around 1,000 rupees. But if a scalp trader generates a loss of even 1%, then he will be making a loss of 50,000 rupees. That is a huge loss. He has almost 1% of his capital. That is why it is very important, if you are scalping or if you are trading with a very large capital, it is always important to plan your strategy, to plan the momentum or the price that you are going to enter and exit the market, and try to mitigate the risk to increase the chances of profit and decrease the chances of loss. Moving on to next segment of the video, how do I devise my strategy around scalping? I have broken down the strategy into steps so that it is easier for everyone to understand. Let's take it step by step. Step 1, I try to trade in fundamentally good stocks or blue chip stock or growth stocks. Now let us try to understand these one by one, and why do I say this? Fundamentally good stocks are the stock which are giving a year over year good revenue, good profit, and have a good cash flow statement. They are able to generate good return on equity and good return on capital employed. Usually there are a lot of websites in which you can just put in these factors and see if the stock is a good fundamental stock or not. Second is a blue chip stock. Now, as we have already talked about in our previous videos, that India is represented by an index called Nifty 50. Nifty 50 contains top 50 companies in India. So all the companies within this index are the blue chip companies. However, if you want to be on a further safer side, just pick the first 20 companies of Nifty 50 and you will be good to go. You can easily trade on those 20 companies. You have nothing to worry about. And the third one is growth stock. There are certain stocks in the market that you have seen giving them 1000%, 100%, or 200% returns in the previous 1 or 2 years. The reason being is these stocks have a very great growth perspective in the near future. One of the example is devise Laboratories. This is a growth stock which has given an approximately 190% return in the past year, and that is why taking positions in such stocks is risk free. Reason being, even if the trade goes against you, you are not entering into a panic state that you have to directly cut your losses or directly exit the trade. That is why I plan to trade either in a fundamentally good stock or a blue chip stock or a growth stock. The second step is I enter into a trade with a longer time horizon, somewhere around 1 to 2 months. In a scalp trade, as we have already discussed, the time horizon is 30 seconds to 1 minute. It is required that you are very good at execution of a trade to take profit in such a small period of time. I'm not that good. That is why I plan my trade for a longer time frame, for 1 to 2 months. Even if that because even if the stock goes into a negative momentum against what I thought, I can hold the stock for a longer period of time and wait for the targets that I actually wanted. Step 3, try to understand price action of the stock. What do we mean by that? By price action, we mean try to understand how does a stock price react to different events in the market. For example, if there is any annual result announcement or there is any good news in the sector, then how do the stock react to this news? Let us understand by an example, and you can check this data on Tickertape or TradingView as well. That whenever there is an announcement of a new car being launched by Mahindra and Mahindra, the stock goes or locks in an upward momentum for a very short period of time. Recently also, in 2-3 days, Mahindra and Mahindra has given somewhere around 5 to 6% of returns for a new car being announced. So we can pick these certain upward momentum and trade in the stock with our capital. Now the fourth step is to have a clear target in mind. Now you have already decided, you have already picked a stock and decided that you are going to long this stock for 2 months. You have decided a certain percentage, whether is it 4% or 5%. You are not a market guru that market will respond according to you. So it is very important for you to decide at what price point you are going to exit the market. For example, if you're buying a stock at 100 levels and if you're planning that stock can give you somewhere around 5 to 6% returns, so it is very important for you to plan a range in which you will exit the market. For example, 5 to 6% return on a 100 rupee stock stands somewhere around 105 to 106 rupees. So it is very important that if the stock price reaches those levels, whether it is 106 rupees or it is 104 rupees, you should exit the stock with profits. You should not wait for further good levels or the stock to reach the exact price that you are planning. Talking about last step of the strategy, capital management. One very important thing to remember while deploying your capital is to keep the capital constant in all the trades that you are taking. Supposedly you are taking multiple trades in a month or multiple trades a year. It is very important for you to keep the capital constant. Let us try to understand this. For example, if you took two trades of 1 lakh rupees each and you were able to generate a profit of somewhere around 2% to 3%, so on an average you stand at a profit of 5,000 rupees. However, you took a third trade in which you tripled your capital to 3 lakh rupees, and in that trade you made a loss of 2.5%, and an overall you made a loss of 6,000 rupees. So that one negative trade or one trade in which you made a loss overpowered the other two trade. So to avoid such situations, always keep your capital constant. So let us quickly conclude what are the steps in this strategy that we should use. Scalp in a fundamentally good stock or a blue chip stock or a growth stock. Second is enter trade with a longer horizon of 1 or 2 months. Third, understand the price action of the stock. How do the price reacts to different events in the market? Fourth, have a clear target in mind before entering the trade. Fifth, keep your trading capital constant over multiple trades that you're taking in the market. Before showing those profitable trades, I want to put out a message that I am putting out these profit numbers just in the interest of transparency for all the people watching this video. I want to be open in all the aspects, and I do not want to influence anyone to use this strategy for trading in the stock market. Let us talk about the first scalp trade that I took. It was in Kotak Mahindra Bank. Kotak Mahindra Bank is a blue chip stock. It is a part of Nifty 50, ranked 11 in the Nifty 50 index. It has a market cap of 3,63,614 crores. It is a very good stock with return on equity somewhere around 14% and return on capital employed of 6.5%. Now you might be wondering, why did I take my trade in Kotak Mahindra Bank? Let me tell you the reason behind it. Kotak Mahindra Bank gave out 2021 quarter 3 results, which showed better revenue growth and better net profit as compared to 2021 quarter 2 results. So I expected a probable upward momentum in the stock. Moreover, Kotak Mahindra Bank had previously made a high of 2100 levels, and currently it was trading somewhere around the range of 1700 to 1800 levels. That is why I did an average buying of somewhere around 1800 levels and was able to book 8.3% profit in 9 to 10 days. You can see the breakup on the screen. Let me just show you. Kotak Mahindra Bank view breakdown. You can see that I took my trade somewhere around 15th of September. I did an average buying. These are all the buy positions. And you can see I did all the selling on 23rd of September. The whole position was sold off on 23rd of September. On and all, I was able to make a profit of 1,65,000 in Kotak Mahindra Bank. Moving on to the next, Trident Group. Trident Group is a company which trades, sells and manufactures textiles and papers. I have been following Trident Group since it was trading at a price of 9 rupees. At that point of time, Trident Group was a small cap company. When I say small cap company, I mean its market cap was below 5,000 crores. At current point of time, the market cap of Trident is 23,647 crores. It is now considered as a mid-cap company. I have seen this company growing, its financials growing over time, and that is why I consider it to be a growth stock. But it is volatile. That is why I broke up my investment or trading position into two batches. Trident Group has given a return of 174% in the past year. It is a very volatile stock and often can be seen trading in upper or lower circuits. I did an average buying in Trident Group at levels of 50.6 rupees, and within a period of 30 to 36 days, I was lucky enough to book an ROI of 13.65% because the stock locked in an upper circuit once I took positions in it. And I was able to make a net profit of 2,63,000 in Trident. Again, looking at the screen, you can easily see the breakup of the positions that I took in Trident. I entered Trident somewhere around 20th of October. Initial positions I took at 41 rupees levels. Then I further took positions on 25th of November. And finally, I squared off my position on 26th of November. So I deployed my capital in two batches and I was able to make a net ROI of 13% in Trident Group. So these are two of my best trades that I have taken using this strategy. There are many more, but these are two of my best trades. I hope you like the video. I hope you like the concept of the video. If you do want to learn such concepts, keep subscribe to the channel and do like the video and do share with your friends who are new to stock market. Thank you so much for watching till the end.